Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording this latest episode here a little before 9 a.m. East Coast time on Saturday, the 27th of September. Barry, September is almost over. Two more trading days.
That's right.
My name's Ben Maldonado, and my partner here is Barry Hederachi. Barry, the theme of the week you and I were talking about is stock market's booming, the economy's humming, came in hotter than expected. What could go wrong?
Everything's up.
Everything's up. Gold's
Right.
up, silver's up,
Mhm.
crude kicked up this week.
Dollar
Commodity
turn dollar turned around.
dollar turned around.
Mhm.
Yields are up, right?
Yep,
Bonds are
yep.
down, yields are up.
Mhm.
So what could go wrong, and what are the, more importantly for us in our little endeavor, what are the prices in different markets that tell us things are changing? And
Right, right.
with that in mind, let's look at the S&P here, because there's one price that we really need to watch.
Yeah. I wish I had more amplitude, expressing these things or bang a gong or something. It's
Right.
because, it's because every week we kind of do a very lulled kind of a session, but we give out all the numbers and, all the levels and everything works out just fine, but we just don't have the noise.
Neither one of us are from Hollywood, let's put it that way.
Yeah, that's a little bit of the problem. It's like
We
little,
just give you the facts and that's it.
yeah, yeah. Well, let's get with the facts. There we go. 66.33 was the level we were watching last week to say that if we can get above it, we ought to stay above, and that's really the level we want to hold before we start moving higher. And then we gave, example of what happened when we got to the 180, which was another key level, and we hung around here for a while before breaking up, retesting, and then getting on the way. And the same thing happened over here in May. If you look, we came up, tried to hold above, couldn't, slipped a little, straddled a little, got on top, retest, and then we started to move again. Now here, back in May, early part of May, we had a clean break, right? Came up to 90, gap open, hung around up there, plenty of air below. So you can see how behavior, how behavior changes when we get up to these levels. So it's to be expected that we're going to have a little bit of overlap, a little bit of straddling, sitting on the fence here till we get the traction, right? To
Hmm.
get moving. And here you can see the traction starts to come after these higher lows came in right there. Here we start to get traction, get higher lows there. And here we've had some higher lows, good enough, but we really haven't been managed to get on top of the 66.33, this 225-degree level in the cash market. So up until it really does that, we're not really sort of balls to the wall, ready to go. We're waiting. We trade the short terms, or you can trade short-term trades and whatnot, but to really look for momentum reeling, you have to wait till this clears, and that's just been the case. Once we cleared that, the momentum picks up. Until do that, we have to be a little bit cautious, and that's all we're doing every week. We're looking at these levels and trying to figure out what patterns are coming up. And it doesn't mean you stop trading or you flip sides every week. You want to watch the levels along with your whatever indicators and methods that you use, and to see which or how the probabilities shift. All right, so that's it. And that reminded me another thing. A friend of mine asked Grok or some, I can't remember which AI, about, hey, what do you think about this podcast these guys do? And he sent me a little copy, like a little paragraph that it gave out, and it said, well, while they have great levels every week, it's an educational program. So I thought that was interesting, right? Because we really don't think about it like that, but we know the educational component is there if you go week over week. And so I thought that was kind of cool,
That is interesting. The other
right?
thing, I'm looking at your chart. You know what? It's coming. You got a 180 in timing coming up here. What's the date there in early
And
October?
that's October, yeah, yeah, that's October 4th. And yeah, well, not just the 180, but we're also running a 90 from this level here. So
Sure.
there are a few things, and we'll be running a 45 from that low. So running a 45 into a high is also a pattern that we want to watch. Yes, so we have all that coming up. I was thinking about covering that next week, but hey, let's look ahead, right? So it's coming up, very important.
Barry, is it's not that far away. October 4th is like what, the end of next week?
Yeah, yeah. No, no, it's not far away. We have a lot of stuff coming up, I'll tell you.
It's next Saturday, by the way.
Yeah. So it's not far away. And I think week after next, it will resolve, all this straddling stuff and we'll find a direction. The other thing I want to say was, once we got into the 135 here level timing cycle, we were watching it. We came down into the 135, came up higher low, and that's when we started to clear it. So there was a lot of things that happened here, and it broke to the upside. And it doesn't necessarily mean every time we come up to a line, there's all kinds of drama. But I think there's a very simple formula we can watch next week. And I was going to mention this when we get to the futures market. But even in the cash, it would work. We want to Monday, Tuesday. We don't want to see a reversal here. Friday's low gets taken out on the cash or the S&P, then I think we can expect a lot more downside, meaning the October level not only could be a low, but it could also get blown out. So we want to really watch this because I think it'll be rewarded in October. And I mentioned this, not that we have to get on top of it and get the high, take up a reversal, but the thing to know is I think the correction could be a worthwhile trade. You know, I'm talking about the entire swing, unlike these 1-2 day corrections we've been having on the way up. Okay.
Right, right.
Right. So one of the key things is Friday's low coming into Monday. Ideally, the textbook would be we don't take out the high, but we take out the low. And that could give us a swish. Why? Because we have a high and a lower high with only a 1 day counter trend, and those things are great to sell if everything else lines up. So let's just watch that. And it doesn't mean you have to trade that, but let's say that happens. And for example, we take out this trend line and market's starting to look, what that would mean is we got to look at the 64.5 level. But that's really where the next big support is. That's if it happens to the downside. To the upside, obviously, if we can hold above Friday's high, we're going to be more stable. And if we can, like we say, have a hold above, then we can expect market to go higher, probably into the 180 and maybe even a little bit beyond. But I think we have enough, not just that it's October, the classical sense, but we have other things that are showing up in October. I'm not sure if it's going to show up at the early part of it or the middle of it, because we have cycles that are coming in like the second week of October. So let's see how that works out. But price gives away what's happening with the cycle. That's my theory. Time is great, but price has to sort of give us some clues, right? Otherwise, timing wise, as you can tell, time is continuous. And so we'll always have a timing point coming up, and not every one of them is going to behave just like a textbook scenario. So you have to watch the price, see the cycles manifesting in a certain way. All right, so that's a cash, and you guys know the level to watch, and you guys also know the pattern to watch. And let's jump straight to the futures. So this is East contract 67.35, 67.36 is the key level. And we talked about being able to hold above that in order to clear and really pick up some momentum. Same idea as the cash chart, and here we just wanted to see if we can get about the 50% and hold. So 67.35 was a level that we were watching, and we're going to continue to watch. Now, you can clearly say we pushed into that and we backed off a little bit. We came up to the 1/3 line. This is the little green line. And it held, more or less it held. But the thing is, we have an inside day. And this is why I wanted to talk about the futures market. So we have an inside bar. And if we lose the low of Friday, we can get a swish to the downside. So you want to watch that. And the reason we also have overhead here, we have overhead and we have an inside day, we have a high that got stuck at a critical level. That's enough to be cautious. Now, once we clear this to the upside, sort of like, same idea we were talking about in the cash chart. Once we clear this to the upside, okay, then we can sort of feel a little bit safer. No guarantees, but it's a little safer than, let's say, being stuck below. See what else. And we broke this 2x1 we've been watching. We've been watching it. I posted, I don't know, last week or week before. about this this 2x1 line, the dotted line. And here was kind of an inflection. You can see how we pulled back, ran right into it from almost like below, and that's what gave us the two-day down move. It didn't count out, we missed the cycle count, but it still had a little bit of a response. I mean, yeah, and back on up. But now, we're moving higher, but we're on the other side of the 2x1, right? Now we're not on the upper side, we're on the lower side. So once that happens, yeah, it's not a bear market, but but it's vulnerable. So you want to watch these levels carefully when we get into critical levels like 50% of a square. Again, we need to get above 67.35. As long as we're below that, a little bit, it's on some weak footing. This is a continuous chart from a completely different perspective. This is a little bit of a larger perspective because we're looking at it from the October low. October low, it's always a little bit of a song and a little bit of a dance because, we have a first low and then we had this false break. And I've used both at different times to see what the market is doing. And if I leave it at the first low, everything, that's what you guys were seeing. If I move it to the second low, you can see what happens here. Now we hit the price and time.
That's a corner.
Yeah, we had
I mean, a literal corner. Look at that. It just went
yeah,
right into the corner.
And that's 67.56. Put that up there. So, what I do is I use one or the other depending on what I'm seeing on the board. So sometimes one of them works, sometimes the other it's, that's why we use a number of charts so we can get a better handle on things. But anyway, the interesting thing is where we saw the D's contract needing to take out the high. I mean, here we have 67.56. We tapped 2 days in a row, right? And this is the target. When I was posting my daily, I kept saying, well, we're gonna have to reel up, and this is where we went up and tapped on early part of the week. So if you want to take this into account, we not just the number we looked at on the December contract, we also, so let me go there really quick, not just the 67.35 here, which is of course coming off the April low, completely different story, right? Here we come going off the October. So it's, it's a 2-year cycle, and you can see we also have a, this to the October low in 2023 and the October low in 2022, because we have 270 going into the second low, right? And so the time count has a little bit of value. I wouldn't brush it off. And even the 450, you can see we were off by a couple of days, but once it got traction, we were down. And the levels are pretty solid with this. The only level, the reason I moved that was to see what was happening in December 2024, early 25, when we were really pushing up into this ABCD, which sort of finished off that leg. All right. And even from here, well, we looked at that level in the Ds, and you can see from here, even from the April low, when we were 180 degrees up, roughly, right? We have price and time. So number of points coming together doesn't mean we have to turn here. We can go and make a lower high. We can do a false break. I mean, classic stuff, right? But we want to wait, and the reason is, we have. I mean, something's there from a key low. I mean, we haven't moved. We haven't checked cycles. We don't check it from every low all the way up. We only really we've been focusing on this major low, and really the sort of the tariff low. I'm not using the 23 low over here because we're tied to that October low anyway. You know what I mean? Price and time is close enough. I can eyeball it. That's the deal there, and so support comes down to about 63, 6,400. So let me mark that. There we go. Now you guys have a pretty clear view of what happened in that square. So that's it for futures. Let me see what else I have here. Let's take a look at the Nasdaq. Ben's going to do a full cover with all the different time frames, weeklies, monthlies. So I don't have a lot to say other than we've been watching this 135. We couldn't quite get to it. Slipped again. We have an inside bar again. And this is why I said, if we get some kind of if we take this out, I mean, the S&P is also famous for doing a false break and then doing an outside reversal on these inside bars. So obviously watch out for that. But these, you can't ignore these when they show up, because there's always some kind of action following them, and usually a worthwhile trade. All right, so here we're waiting for 25, 162. That in there. There we go. And let's take a quick look at the Dow. So coming off the same low that we were just looking at from 2022, we have the Dow hitting a key level that's 288 degrees up from that low. It's a major level, and it backed off, right? And the Dow actually had a 1-day counter trend. So this is really key. Let's just watch this. Everybody's doing something a little bit unique, but altogether a pattern that we really want to watch. So if the Dow loses, obviously Friday's low, we want to watch that closely, right? Why? Well, because we just went up and tapped the major resistance level. Big time support is 44,820, 44,300. There is a little bit of space there. I think that's enough. Here's the ES calendar day continuous chart. You can see we hit 240 degrees up from the tariff flow. This is the first time you guys have seen these other charts. We didn't look at the 240. So you can see how we tapped it there. And you can see how the 50% level, 65.17, that's really where the support is, basis the daily. All right. So that's kind of where we are and what to look for. We did a lot of work last week. There's no question. Market got a lot done. And
Emphasize enough, Barry, how to everybody how important that this inside bar or the 1-day counter trend is if it gets taken out. It is a sign of weakness.
yes.
And that's something you can capitalize on if it materializes.
Yes. And we call them out every time we see them and things that we cover, right? So it's you guys should know about this. Here's the weekly cash, well above the 64.50 we were watching earlier. We were sitting under it. Now we're above it. We ran a little bit above the 8. I mean, this is looking okay, basis the weekly, right? And it'll be just fine long as we're holding, any kind of a counter trend holds above 64.5. The cash is okay. Now we'll take a closer look at Nasdaq. Ben covers every week, but we'll take a little bit more of an in-depth look at the weekly on this chart next week. But for now, you can see we're okay. 64.50 seems to be the support, and the continuous chart is coming off the 2020 low. 65.30 was the level. Remember this 6,400. It came up here and it really spent about 6 weeks being stuck, and then eventually, got enough force to break through, and now we're above it. So 65.30 becomes the support level. 65.20, 65.30 basically. So as long as we're above that, now 6,400 area becomes support. So this becomes a band, and we'll see if it turns into anything larger. But up until here at 6,400, we have support. But if we get to 6,400, by that time we'll have to reassess, what the pattern looks like and what we're doing, and we can take it from there. So this same chart. All right, let's take a quick look at the 30-minute. So this is like our bread and butter chart. I post this on X every day with some commentary around the opening. If you guys aren't following us, you can follow us there. The links for both of our X accounts are in the description. 67.52 was resistance. We ran up there and hung out, really couldn't do anything, started to slide off. And once we got below 67.43, like a swish down to the 67.17 area, I really couldn't hold above. And I had this 67.28. It's a little bit in gray. We were watching that, and you see how we got stuck there. A little bit error to say how these levels hold up. We might slip below on the counter trend and get its stalls, and we dropped right to the next level, 66.80. We rallied off of that counter trend. We got stuck below 66.98. Switched right past the old support all the way down to thought it would stop around this area, 66.50, but that still is a important area, 652. But we went all the way down to 66.25 with the false break against the other low, which told us right away, okay, we're done with the downside. It's the upside now. And to confirm that, market ran up, came back, and really held above 652, even with some air. And then I posted this trend line and basically said, look, as long as we're holding above the trend line, price action is probably to the upside, especially if we can clear 680, a little muddy through here, and it was. We were looking for it to go up and test the old highs for the week, and which we did on the first run, and then came back. Second run, we're still in that area. Let's see how we do. So going into next week, the 67.17 is really important. I think that's the level to watch. We can somehow, get on top of it. Well, then obviously we don't have to worry about any lows getting taken out, right? That's the clue. And the clue to even testing 67.17 is the fact that we can hold above 66.98, 6,700, right? So if we can do that, great. We can look for upside. We clear that, fine. We can look forward to 67.50. But while keeping in mind these minor resistant levels, right? So if we can get there, great. If we fail here, it means there's greater weakness. And that's how we use the levels. It's not like it has to stop here and turn. If it's weaker, if it gets taken out, obviously the market's stronger. And that's how you want to look at that. Now to the downside, 66.80 is still important. This bracket here, 52 to 60 is important for the long run. And I would say if we get below 66.80 on Monday, Tuesday, market's in a little bit of trouble because it really shouldn't get back in here. But if it's a little bit of trouble, the first clue. Second is if we can hold above 66.52, then any kind of counter trends getting stuck below 66.80 afterwards is showing weakness. Then you can see the patterns basically can be rolling away. So anything other than holding above 6,700 looks weak, mainly because of the bigger pattern, right? So and if we can hold above this, get on top of 67.17, okay, we're back on track. Everything's okay. Just so you guys know, this little zone that I marked up last week, we stalled here for the first time, pulled back, then we rallied. That's okay. That tells you market's stronger. But the fact is that zone is still here. So we want to watch that area on Monday to see what happens. All right. And that's a long talk about the S&P. Let's move on. Let's move on to bonds.
Really good.
Oh, thanks. Let's move on to bonds. I'll take all of Saturday here. The bonds, what happened here? The ABCD that Ben mentioned a week before really, really held it. And we sort of got the false break against the high in April. And we're straddling, but we're not really showing a whole lot of weakness. But we know the ABCD sort of completed and this looks pretty weak. Like Ben was talking about, yields are up a little bit. So, it could straddle in here because we do have we have some stuff below. We have some support. We have a little bit of a floor. Unless something really weak happens, then we're going to just slip right through. And that wouldn't be good, especially with the floor like this. And if this is really a low, we shouldn't really slip under, let's say, Thursday's low. Yeah. So that's that. And the lower trend line is still, if you guys can just draw that quite a ways down. So even if to come back to test it, that's quite a move. Let's see what happens there. So for bonds, that's what's happening. Taking a look at weekly bonds, let's go to the square chart. So we're counting out 288 weeks from the high back in 2020. And we kind of made a high into that, right? We kind of went up into that 288. And now we're making lower lows. Not exactly bullish. Could it be just the counter trend on this up leg? It could be, but we know what happened on the daily. We had square resistance here. Weekly, we have square resistance a little bit above, couldn't even quite get there. And if you notice the pattern here, we're making lower highs, right? And if this so far technically it's a lower high because we have a lower low. Um, so let's see what happens next week. But it looks like the push is to the downside to test this 114 area. But watch the daily, watch the level on the daily. That'll help you, say this is 116.5, 116.14 level. All right, let's take a look at crude. Crude playing by the rules like crazy. So 61.61, we made the lows. You can see we've tapped. If you're watching this, we've been watching this for a while. The show, this crude chart, you're gonna have to love because you can see how well this is working. Yeah, market's not doing much, but it's working great capturing the consolidations. So anyway, the big deal here is, we made the low. We were looking for a flush. We got the flush. Then we had a nice run up. And then we have this nice sort of sleepy consolidation, but it's not, can't really discount it because it's playing by the book. 61.61, we're making the lows through there, and we're really pushing up against the 65. So, we always talk about, we want to wait till we get above the 64.75, 65 level, till we get, start ramping towards 80, let's say. Well, not that it's out of the question, right? We've done it before, just this year. Oh, can happen again. So I think good things can happen in crude, but we have to wait a little bit, burn a little bit more time. But for now, watch this. Obviously, if we get below, we're going to probably just channel in here. And if we can stay above, it's a little bit more bullish, and we can trade it that way. Weekly crude, again, the reason we were waiting for 65, because that'll also clear the weekly chart and get us on the upside. We're having lower highs, but we're also now having higher lows. So we're starting to compress. And you know what happens when we compress into these things and break out? I mean, here was another good one that we had earlier. So let's wait for that. Not much to say other than having to look forward to what's coming. Well, here's the gold chart, not looking bearish. So, and this is coming off of what's that, Ben?
I said not at all.
No, not at
It just
all.
keeps plowing through every level.
And it's funny because I have friends asking, "Hey, is this a good time to buy gold?" And I really don't have a good answer. I'm like, well, what do you say? Knowing what we know and knowing where the price is and the angle of the sort of the move, and somebody's interested in buying now, obviously there's some risk, right?
Yeah.
Versus earlier.
Yep.
And if you guys have been watching our show, and if you like our show, please feel free to like and subscribe and hit the alerts. But if you've been watching our show since 22, 23, 21, I don't know, all through here, we were looking for places to get long, and we were talking, and I remember Ben talking about it feverishly, like, hey, this is going to break out, this pattern's going to go. We don't know how high, but it's going to go. And this is why, if you look back in this chart, this ABCDs down here, we were calling these lows out and looking for places. At the time, we were actually trading trading the swings most of the time. But once it got above, 50%, this ABCD that came in 23, and the fact, after we broke out, this area was really the place to get in, right around that, above that 90, or on this ABCD completion going back up right in here. These were the areas, and if you go back and look at the tapes, that's what we were talking about. Here, I remember this ABCD up. We were looking to see if we can hold above 90. If we can hold above 90, then we were expecting a move higher. So ever since that, we've been talking about these consolidations, how bullish it is when we break them. So we haven't, it's not, we're not, sort of these gold bulls that are like always, talking about, oh, gold's going to go to 50,000, right? It's really technical. If you guys go back and look, we were really making the case. We're like, look, technically this is going to break, not like we're bullish on the metals just for the hell of it, just because we are here or something. I don't know why people are, but well, because of inflation and value and the dollar and all these other fundamental reasons. But anyway, getting back to now, I don't know what to say when people ask that. I'm really, because I would feel really guilty if they get in and then gold has a massive correction, which would still be not a problem. But I think, you know, if you're not long, then you have to wait for the next correction, which I'm sure will come because any healthy market will get one. And gold has been very, very precise in having corrections, and they've been sort of consolidation so far, very bullish. They're all compressions and bang to the upside, compression, spring to the upside. So maybe we'll get some kind of a correction at some point, and I know that would be a good place. I don't think it means the gold cycle is done, but a decent correction would let everybody buy the dip. I'm imagining. But buying here, like if you guys know the way we trade the levels, like you want to buy exactly at this major level. I don't know. I think you have to sort of go with your methods, or
I mean, it could pull back $1,000 and still be bullish.
yeah, and what a deal, right? If we can pull
Right,
back, that would
right.
be
So if you bought
so.
it up here and it pulls back 1,000, can you ride that out? That's what you have to ask yourself if you're buying up
Yeah,
here.
yeah, and the crypto guys do it. So
Yeah, it's true. It's true.
um, anyway, the gold looks pretty good in the big run. Obviously, short term, we're at a sort of a critical point here, 37.87, and we want to get through that to get to test 4,000. So far, we're building some time, and you can see, we're hitting these levels, and we're not like backing down, having 50% of the square corrections. We're holding very, very tight. So when they hold tight, we got on top of the square, it's usually safe to start trading in that direction.
Hey Barry, one thing I wanted to point out,
Mhm.
we're super bullish. Yes, that's true. And we've been, telling people when these consolidations are coming up. We may be coming up on another one because if you look from the May, let me see what's the date, the May 15th low,
Mhm.
we got a 90 by 90 from there to
Okay.
the high.
Okay. Mhm.
So let's watch it. Obviously, like with all these squares, if we take it out, if we sit on top, it's going to go again.
Right. Right.
And so, but do notice that we are at a 90 by 90 there on this last run.
Mhm. And how convenient. And we're also stuck exactly at the critical level coming off that 23 low,
I know
or back in, yeah.
it's a good spot, but let's
Mhm.
see. It could we will if history recent history is a guide, we'll blow right through it, but you got to watch it and got to notice what's there.
Yeah. And if people asking me as a guide, it's probably going to have some kind of a pullback. So it goes both ways. All right. So that's gold. Let's take a quick look at gold weekly. On the weekly, well, maybe in anticipation, Ben, 2 weeks ago, I set up that little buffer zone up above, saying that, gold's going to find a little bit of resistance when we get up into this $100 range between 37.04 and 38.04. And when you know it, we came and tapped
Yeah, that's that's
38.04.
that's good work.
So now we'll see. We have three squares out, 3 year mark coming up in 2 bars in 2 weeks. That would be in October also, end of October. So let's see what happens here. On basis the weekly, above this 37.04 level, gold is okay. We cleared the level. The only thing is this is just from this one, the 22 low. But when I looked at from a couple of different angles, this entire zone becomes sort of a resistant level, and we were able to break through. I would like it to see it get established here before we start the next leg. That would be very good. Either that or we just blow right through. Now with the 90 that Ben mentioned coming off of the low here, we want to be a little bit cautious, watch the daily level, see if we can hold above or not. If we don't, let it breathe a little bit. That's fine. We have till about 3,700. A lot of room to breathe, I would say, as far as gold breathes. And well, let it finish up. But this is a big resistant level, and price and time and everything mates up here, and the 90 kicks it in the gear that could uh, give us some kind of a correction. And so far the corrections have been mostly consolidation, so it might not be so bad. We'll deal with it as we go. Let's take a quick look at silver.
The
I was gonna
star of the
make
show, huh?
Yeah, I was gonna make the background in like in black and the bars in red, because it's
Right.
running so red hot. All right, so silver is running. That's all I can say.
Much you may have to switch your squares to 144 size, make them bigger.
Yep, yep. Silver is running, and one of my rules is don't get in the way of a good bull market. Just let it run, let the bull run, and that's sort of what we're doing. The 90 that Ben talked about might be coming into effect because when you have a good square at a shorter time frame, longer one, there's always something from the longer time frame that lines up. And here it's really 46.70, 46 and a quarter. And we blew past 45, fine, but we're 46 and a quarter is really the next half square. And it seems like we stalled 46 and three quarters. If long as we're below that, I would kind of kick it into that consolidation mode because that is a critical level. Sort of like what happened when we hit the 50% here. You can see how we consolidate real tightly. If silver has I mean, the higher we go, the bigger the consolidation counter trends become. So if we can hold, long as we can hold above 44 and a half, 45, 44 and a half, I think silver is still in good shape. Obviously, coming all the way down to 40 would be, at this point, looks like some kind of a treat and a gift. And while keeping it still very bullish, coming all the way down to the 288-degree level, 35 and a half, still bullish. Everything looks good. So that's that. I don't have, there isn't a whole lot to add when the markets are running and you've been expecting, the direction. What else can you do? So this is the part, I guess, where you enjoy it. If you guys kind of lived through the sideways, well, this is the part where you kind of relax into it. So silver clearly looks like we have more to go long term. So that's what we mean about, surely we can get some kind of a short term correction, but long term it looks very good. Next, weekly resistance around $51. So $51, who knows, it might end up being nothing, meaning a very low price at some point, but that's the next level. Basis weekly, I showed you guys on the daily, coming even pulling back to $40 is, that would be a treat. Coming down to 35, is 34. This level is still, market's still very bullish. We get a tremendous base below us, and this is just the spring that we get off of these things. Yeah, you see this little A, B, C, D, okay, a little bit more. Anyway, I'm always wondering where these things come up. So 48, let's see what happens there. But anyway, the big weekly number on the chart is $51. Let's move on to copper. Made some good progress this week. Well, ever since the flush, we've been bullish for obvious reasons, and we were waiting for it to get above the 50% of the square, which we did. And then we just, normal, slightly sloppy bull market, right? Bull trend. And ending up, and I said, the next resistance last week, I just said, once we clear this, next resistance is really 495, and bam, sure enough, we knocked it right at the 495 and came back to the quarter level support at 470. You guys know the role here, right? As long as we can hold above and push higher. Obviously, if we can take out 495, we're definitely moving higher. So let's see. Consolidation at 470 is the key level to watch. If we can hold above that, stronger. If we get below that, even a little below, trend line's holding. Trend line has a couple of different angles, so right above there, we're okay. Above 460, copper's in pretty good shape. I don't see any cycles firing just yet, coming off that low. Anyway, we'll cover the metals a little bit more next week, and maybe try to get the show done on Friday. Here's the weekly 480 was a key level. We're a little bit under that. If we can get above that on basis of weekly, I think we can start picking up some momentum to the upside. Basically, it's just doing what we've been talking about. So not much to add to that. Let's move on to Bitcoin. I think last week we talked about this. What did we talk about? Well, we had that 50% level up here. I had said 618 up above, and we were looking for a move lower. And lower 117, this 111.7 number looked interesting last week. And we had some timing, other short-term cycles. So I thought we might get a pop going into next week, which we didn't. We slipped right through. So what that means is, well, the markets, weaker because that pop would have told us, it's a little bit of strength in there to manage to go up. We were up a couple of days. It tried, but it couldn't, right? So the overall move is still bearish because, we called out the high here, the false break here, and also we talked about the market turning around either around the 50% level or below the zone where the 618 was. So the fact that we blew through this potential reversal that we had at this 111.7 means, well, it just brought us to the 50% of the square. So that square level is 109. Now, here's the big deal. I think this is a big point for Bitcoin here. If we take out 109, I think it's going to start a larger leg going all the way down into testing these levels, maybe 97,000. We might break 100,000. And that's just what it looks like. It might not all happen in one day, but we want to watch this 50% level. We don't want to really give that up if you're bullish. So the ABCD would get us at least to 100. And if we get to 100, I'm guessing we're going to go and test these lows. So, and we have a nice little high over here right at the 90. So I think we're going to break below 100 just for the hell of it, because that's what markets do, right? If you look at all the candle wicks in Bitcoin, you can see these are all pushing a little lower than it should, right? And anyway, so we had a chance to turn here for a little bit of a recovery bounce. We failed, meaning it's really the next level, which was 109. We held here. If we take this out, then I think we have a lot more bearish stuff happening, perhaps through October. Why? Because the high that came in was pretty good, really good high. So good highs take time to correct in price and time. Also, we're coming up into about a 45-day correction. So that's another thing to watch for. That's coming off the second high, coming up right into this next few days. But it really doesn't matter. What I'm really watching is the 109 level. If we take it out, I think we're in trouble. If we take out this other low that we had in August, right around 107, if we take that out, then I think that would confirm that my fears are over here at 109. If we take 109, 107, then I think we're well on the way. For recovery at this point, we really need to take this buffer zone out. We need to get above 111, right? That's kind of how I'm looking at it. All right, enough of Bitcoin. Let's go on to the dollar. Interesting dynamic, right, Ben? We got the dollar rallying, Bitcoin tanking.
Great call that you made off that, the bigger picture 144 by 144, because everybody was bearish. It corrected, and then when it came down again, everybody got bearish again. And it was a perfect example of how the analysis can sort of get rid of the noise you get from the news.
Oh, absolutely. That's why we use these charts. we're sticking by them. So yeah, we had a false break, and we were looking for a bounce here at the 50%, here at 97. Now we cleared the trend line, which was the key, right? We really wanted to see that break, and now retest up the break, and hopefully if the retest holds, obviously higher above 97, the better. Then we can move toward 99.5 and up into par. So 72 degrees is really the next full square resistance, is 101. Let's see what happens. Right now we're looking for basic retest up to break out. See how we do. Here is our guiding chart. We had a great square come up at the 144 by 144. Then we had the false break. So now, if this is going to unfold accordingly, so we need the last week's low being held, and we obviously prices moving higher. But last week's, as far as the weekly goes, as long as last week's low holds and the daily levels are kind of managing, I think we're okay. And we're long the dollar. Talking about the euro, well, I remember looking at this and going, I can't even believe this is happening, and thought to turn down and go lower. But given that we had the 180 by 180 coming up, right? Maybe I thought maybe they will get up there. But this is close enough. I'd say close enough for the euro. The reason I say that is it's possible that the low was really back in this is a little bit like what happened in the S&P. So here's another lesson, right? If you guys are watching all the way through the show. So the January 2nd low could have been the low, and then the low that we're going off of was the false break low. And that's how I square up the chart sometimes. If I'm not sure exactly what's happening, as you use it, it lines up. So this lines up a little bit better right in there. That could have
Hmm.
been the 180 part.
This is the art part of the science and art.
Yeah, I mean, especially these cross markets are not, not exactly, they're not pure markets like corn and beans. So you get a little bit of a play when it comes to price. So the point is, we called out this false break and we had a 1 day counter trend basically, and we started selling off. This is kind of what I was expecting. I just couldn't believe you're, heading up higher. Anyway, 1650 is a level we want to watch. If we take out this 50% of the square, then I think, and we start making lower highs, euro should be flipping lower, and obviously dollar moving higher. So this would be the 1650 to 50% area is the one we really want to watch. Obviously, we can sit here, bounce a couple of days, consolidate here before going down, but watch your bearish patterns, and it'll tell you everything you need to know. That's it for the euro, because it did what we were expecting to do, not a whole lot more to talk about. So we talked about that 50 was it on the daily chart. It's 1653 on the weekly. Obviously, we need to take this out. That was a false break basis the weekly. So false break basis the weekly is a kind of a big deal. Big things can happen. Here's a false break basis the weekly. You can see how much we consolidated before we dropped. Here's another false break basis the weekly. You can see what happened after that. So we watch these like hawks. Here's another false break. See what happened. So they are everywhere, and you want to watch them. Here's another false break. See what happened. So here's a false break. And so the probabilities are, if we take out this 50% level, it's going to get weaker. But like Ben was mentioning, we were talking about this a couple 3 weeks going out. So waiting for the correction to finish up. All right. I know you're going to cover a bunch of commodities today and get a full deck. I'm not sure if natural gas is part of it, but basically we're wrapping around this 298. Not a whole lot to do. It's still ramping. We have plenty of sideways to see what happens next. We'll let you guys know when that gets ready, when the momentum's built up enough to talk about. Hang Seng is doing okay. If this is any early sign, it's looking a little weak. 26 to 30, we got below, and if Hang Seng gets stuck below this, I think it's going to get weaker. Probably go and test this 2,500 level, given that this is an important high in other indices, right? So, and it's breaking the steeper line. There is another line here. We'll see if it breaks it. But anyway, here's a good example of a high. Then we get the counter trend, and bam, we took out the low of the counter trend high. And now we're going lower. So this could be a preview of things to come. Maybe not, but we're watching the pattern. It's obviously there, but we're also watching the level and the trend lines and all the other good stuff. All right, that's all I got. Let me put it back to Ben, because we have a lot to cover. Let's get rolling with the Nasdaq.
Good stuff. I love when the story comes together, like the dollar strengthening, bonds weakening, risk, starting to take it on the chin a little bit. That whole story fits together, and
It's
it's
beautiful, right?
nice. Yeah, you see because you can see the flows and how capital is flowing between the charts, and the different
Absolutely.
instruments.
Yep, yep. And while that's happening, we have the stock indices potentially squaring out and hitting
Yeah,
key levels,
yeah,
right? So
yep.
everything's coming together.
And
Well, they all, yeah.
gold and silver ramping. I mean, it's all
Mm, mm.
it it tells a story, and it's really interesting when the story is consistent and not sort of jumbled.
Right. We should do this like in a movie form, get creative and make each market like a character,
There you go. The hero, the villain.
Uh-huh. So we got above, we held above basically, right? And we
Yeah.
also have an inside bar.
Yep, we have that inside bar, so that's we're going to watch the high and the low of that on Monday to see which gets taken out first. On the downside, this 24,263 is the key. Right? If we get below that and get stuck below that, then this structure up here looks like a false break, like a fake move higher. If we can, maintain like we have so far the air above or just stay above here, then 25,720 is in play. But let's take a look. I think you showed a little bit of that. Let's take a look at the calendar from the 2022 low.
Wow, look at that.
Yeah,
Hmm.
almost a perfect corner after 3 years, roughly.
Hmm.
And we did an interesting thing, Barry. We did a 120 run
Right,
calendar
right.
day,
Hmm.
into that high.
Right, right.
So this bears watching. If we cannot get above and settle above 25,000, that's a flashing yellow light at us that you got to be careful here.
Hmm.
And again, like Barry said, when you have a pull, after a big advance and you have a pullback, and then you only get a 1 day counter trend or an inside bar, and you take out that other bar's low, it's signaling weakness. So we want to watch that early. If it doesn't do it, we can say okay. If we get an up bar, we could say okay. It could be that this is the low, and we're gonna swing high, swing to the next high off of that. But we really want to watch it and see, given that we've either had a 1 day counter trend or inside bars on all the major indices. Let's take a quick look at the weekly. You can see the key level here on the weekly is 24,000. That's 135 up from that uh, COVID low. So
Hmm.
that's pretty significant spot. So 24,000 on a weekly basis is key. We're sort of straddling this 1/8. We haven't cleared it. We haven't gotten stuck under it. So that's like an early marker we can look at. If we fail there and go and start going down, Barry always says you got to give it an eighth, either
Hmm.
side of the major full squares. Give it an eighth to see what happens. So we haven't made the decision yet, but 24,000 is key here in this particular time frame. And lastly, let's take a look at the monthly. Once you can see, same thing, 24,000 is key here. That's 180 up from the 2002 low. So it's a pretty significant spot. We are a couple time markers that I wanted to look. 45 months high to high from the high in 21 to the current high. 45 months, significant. And from the lows in 2022, we're about 3 years out, 35 months this month. So
Well,
timing's
36 is the
there.
one, right?
Yeah, timing's there, and 36 would come in October. I think that's October. Yeah, yeah, it would come in October. It would be 36. So the timing is there, but as we were saying earlier in the show, price needs to confirm the timing. So monthly basis, getting back below 24 would say, okay, the timing kicked in. That high is good. So we want to see if you really want to see the turn on a monthly basis, we got to get a close below 24,000. I know you covered Nasdaq, so let me just jump right into Bitcoin. Let's take a look at Bitcoin daily first. There's your daily. You had 109, I'm at 108.3, so we're in the same
Mhm.
area where it really has to hold here. Because if it doesn't hold here, we're going to take out these lows, and then we have a lower high to go with a lower low. So things could get spicy there.
Mhm.
We lose 108, we're heading down to about 97. 97 will be the next. And we had a decent count, low to high. Did a 52 calendar days there. We've done
No joke. Yeah.
45s, we've
Hmm.
done 52s looking back. So the high's good. You called it in real time. That was a great call on that high because it sure looks like, minimally we should be seeing ABCD, and, potentially you could see a fast move down here because it's set up with a lower high.
Yep.
So we're watching that. Let's take a look at the weekly. Weekly, 107 is the key number. Interestingly enough, we're breaking this trend line. Actually, the price right now is right on it. But this, again, is just showing weakness. If we get below 107, 108 area, get stuck below there, 90 could be tested, and odds will favor that's where we'll be headed.
Mhm.
So it's developing, and you can see it. It starts in the lower time frames, and then it filters into the higher time frames when you get a trend going. Let's take a quick look at the monthly. So monthly basis for, you could say, since November of 24, October, November of 24, we've been struggling with this 111, 112 area. Here we couldn't get up to it, couldn't get above it. Here we just keep straddling it, right? We can't stay above it. So 112, monthly close below 112 would give us the potential for a full bar below there, which would, sort of cement this top in on a monthly basis. Again, it doesn't mean it's going to crash, but it means we're gonna have to watch the lower squares and say, okay, 93's next. 93's got to hold. If they lose 93, then you go to 74. But right now, it's looking like we're threatening to lose this 111, 112 area.
Mhm.
So we'll watch and see. The point here is that, Barry showed you the Bitcoin daily. The monthly, weekly are starting to confirm what the daily's been telling us for, weeks now. Is that we have a high in place. We now have a lower high in place. Things are weakening up on the chart there, and the monthly and the weekly are starting to roll over as well. So you got to be careful right now with Bitcoin. Anything else you want to add before we head to the commodities?
No, we're good.
Okay, we'll take a quick run through some of the commodities. Corn and soybeans. We're just going to show the dailies. Um, Wheat, I'm not going to show wheat because it's the furthest behind and needs to do a little more developing, but we are going sideways on the daily, but with higher lows. So that's something to watch on wheat. Let's see if we can get some higher highs. Corn, this is what I think we're doing. You can see it if you have a 4 hour chart. Pull up your 4 hours, you can see it a lot more clearly, which is we're doing a little ABCD down, which for all the people who've been with us on gold, these kind of corrections after a move up are bullish, and that's what we're seeing in corn. So let's see if this week we can complete the ABCD and then start to move back up again there. Let's take a quick look at the daily on beans. Beans has been leading. It has completed its ABCD down, as you can see here. So now what do we want to see? We want to see a reverse, and we want to see it capture this full square at 1035. That is a key spot. If we can sit on top of that, then we can begin to, try and break out of these highs that we saw in this channel. Let's see, where is that? That's going to be a key level around 1080. But the first thing we got to do, we completed the ABCD. Now we want to capture the 1035 level, the full square here, and then we make the push, break out of this channel, and then head up to that half square at 1125. So I think corn's going to try and complete it this coming
Mhm.
week, and then we want to see if these things can actually break out.
Yep.
All right, now let's run to a couple other ones that we want to look at. Here's sugar. I was talking about sugar like a week or 2 weeks ago and saying, hey, there's a false break. Let's see what happens after we get the false break to give us more clues that we're looking like that we have a turn here. We had the first push up, pull back, give us a higher low, strong reversal off that low. This week, let's watch and see if we can take out that high. And that high is around 1659. If we take that out, then we're heading to 1749. But this looks good. The structure looks good here. The action since the false break is telling, we gave us a higher low. Now let's see if we get that higher high to go along with it.
Mhm.
Let's take a quick look at the weekly. The reason I wanted to show you this weekly bar is we had that push up, after the false break, and now we've come down. And look at where we closed this week, right? We made a lower low, but look at where we closed the week on the high.
Yep.
So next week, if we can have the reversal bar, just print a higher high than this week, that'll be a good bullish sign for the bigger trend in sugar. Lastly, let's take a quick look at the monthly. You can see here again, we made a lower low this month, and reversed. But look at where we are price wise. 2 days left, and as long as we don't have any kind of sell off, we'll be closing near the month's highs. Also, low to low, Barry,
Hmm.
120 months
Right.
in this area. So I think we're going to get some decent action in sugar. The main thing we want to see is we want to see the daily this week take out this high and give us that higher high and a high to go along with the higher low.
Mhm.
It's early, but this is when we like to identify them and then, begin getting confirmation of the direction to trade. Anything you want to add here on sugar?
No, it's great. I'm glad you brought this up. Yeah, good
Okay.
timing.
Let's go to the one we're looking to short, which is coffee. Let's see what we did this week in coffee. So we said last week we made a lower high, strong move down. We said, okay, let's watch this next pullback. Well, so far the pullback has gotten to 380. If we get stuck here and reverse next week, strong signal, right? Strong signal to go because we had an inside bar and then so far we have two up bars. So let's watch and see if we get the reversal on Monday. If we do, it's a good setup for a short. If we keep pushing higher, then we're going to look and say, okay, do we get a lower high here? Keep your powder dry. If we get above 380, we don't want to attack yet. We just want to see, do we get a lower high and then get a reversal? But it's beginning to take shape, right? It's all about the daily chart right now. So we want to watch and see, what happens here on this daily. Anything you want to point out here on the coffee daily?
No, we're good. We have to watch the price action here. 2 day counter trend would be perfect. Is perfect. We get it. Let's
Yeah,
say if we get a 3 day, or if we settle above 380, then we'll have to wait and see.
that's it. I mean, if we get 2 day, the thing that I'm really watching is if we get a 2 day counter trend and get stuck under 380. That's kind of the stacking the double stacking the odds in your favor.
Mhm.
All right. Lastly, we'll take a quick look at nat gas. Hold on. Where is it? There we go. So, what are we watching in nat gas? We had this low come in sort of off of this ABCD. You can see we've been doing a bunch of ABCDs here, which is a sign of a correcting and consolidating or congestion market. But what we've gotten so far off of this is we had a push up. We had a higher low that held this 282 level, and now we've made a higher high. So next week, let's see if we get some follow through here. If we do, and we can get up, into this half square and sit on top of it, then I think we're in decent shape and we've got something to work off of here. I'm just bringing it to your attention. I don't think I'd trade it because look at all this garbage that we've been through here. But the higher low and the higher high is a decent sign at first, at least to put it on the radar. And let's see how it handles this half square when we come up here. And that's it for the commodities. Things are getting active. Obviously, I didn't cover gold, silver, copper. Barry covered them, but there's money pouring into those. We've got nat gas and crude oil that are potentially areas that we want to look at because money's coming into there. The softs between sugar and coffee, there's action to go in there, and then of course the grains. We see the grains moving as well. So money's coming in here. I don't know, why, what's the reason. We just know it's starting to come in. And as these charts sort of shape up, we want to be able to take advantage of it and catch this next commodity cycle. Could be related to the war drums, right? The war,
Absolutely.
obviously,
Yeah, yeah.
yeah, the commodities are people are going to want to own the commodities because it's going to disrupt supply chains and it's going to disrupt um, people being able to get these commodities, so the prices will go up. So I think we're sort of seeing some of that. Either way, we're almost into October. September was not boring. August was not boring. Certainly, the remainder of the year is going to be active, and it's an exciting time to be a trader. So good job with everything, Barry. I hope everybody has a great weekend, and we'll talk to you next week.
Thanks, man. Good job. And you guys, thank you for following us and all the comments. Now, we just wanted to ask one thing. If you guys want us to post, we're trying to figure out if we should post on Saturday or Sunday, and let us know, if you have a preference, and we'll try to follow that. Because otherwise, we're kind of sometimes we post on Sunday, sometimes Saturday. So trying to figure that out. Have a great weekend. Thanks, Ben. We'll talk to you guys later.
Take care, everybody. Bye-bye.
Bye-bye. Bye.